Hello and welcome back to Alpha Mission, guys. Hope you're doing really good. So topic of today's video is actually very important. If you're an active investor or a trader or somebody who's trying to get into a stock market, आपने नोटिस किया होगा कि पिछले कुछ दिनों से स्टॉक मार्केट्स जो हैं all around the world are going down, which has created frenzy amongst the stock investing community कि अब क्या करें, हमारा portfolio is bleeding money. All the gains that my stocks have gathered over the period of last couple of months, they've all been eroded. So today's video is actually going to answer all of that. So please stick around until the end. Also, do not forget to like, share and subscribe. We are actually going to talk about 3-point agenda. First, we're going to basically analyze the overall impact of this meltdown in the stock market. And secondly, we will try to analyze why the stock markets are down. What are the big macroeconomic trends which is causing this landslide? And thirdly, I'm going to talk about what I am doing when the stocks are down and all different markets are down, even crypto, and some of the recommendation for you guys so that you can also fine-tune your investment portfolio, especially during this time. So without wasting time, let's address point number 1. So guys, आपने notice किया होगा that for the last couple of weeks, stocks have tumbled, indices are low, even the safer bets as good as ETFs are also down. To really understand the magnitude of this impact or this downturn, we will look at some of the key indices around the world and see how much they are down by. So Nasdaq, one of the biggest exchanges in the United States of America, is down 13.6%. S&P 500 index, which is basically the top 500 companies in the States, is also down 9%. New York Stock Exchange is down by 5%. Sensex and Nifty are both down about 4% from their highest levels. So if you try to put this in perspective, Nasdaq, which has a market capitalization of $19.4 trillion, has lost about 13.6% in the last couple of weeks, which means Nasdaq alone has lost money or value worth $3.5 trillion. And guys, this $3.15 trillion आपकी और मेरी जेब से गए हैं, because the stocks that we had in our portfolio, they've all sort of fell down and lost value, and this is the value that we're talking about. If you scale it over global magnitude, this is what the impact is. And do you know, more than 40% of the stocks in Nasdaq have been halved in terms of their valuation. So some of the big stocks which have tumbled here are Square, Netflix, Shopify, Peloton, and the list goes on and on. So guys, अगर आपको कभी भी ऐसा feel हो कि it's only you who are losing money, well, you can basically give yourself a little bit of consolation because you're not the one who's actually losing money in stocks these days. It's basically a phenomenon around the world. So now that we've understood the impact and the magnitude of this downturn, let's try to address why this downturn is actually happening in the first place. Now the answer to that is not very simple. There are a couple of things which are happening all at the same time, which is causing stocks to tumble, crypto markets to go down, and a lot of other economic shifts happening. First of all, let's try and understand that global markets are increasingly connected. So अगर आप इंडिया में हैं और इंडिया की स्टॉक मार्केट में इन्वेस्ट करते हैं, then you will know that all the paisa which is in the Indian stock market, it's not just domestic paisa, it's also the FIIs, which is the foreign institutional investors. So obviously, if there's something gonna happen in the US which is causing a lot of uncertainty, these investors or high net worth individuals will basically pull their money out of other stock markets, including India's stock market. And that is why Indian stock market is also going down. Most currencies in the world are actually pegged to the dollar value. So any impact that happens on the dollar value will have a ripple effect on other currencies as well. And that is why it is very important to understand what is really happening in the US economy. So first of all, Federal Reserve or the Feds are increasing interest rates. Now you don't need to really get into the nitty-gritty of it, but बहुत ही simple terms में, अगर Federal Reserve, which is equivalent to Reserve Bank of India or Bank of Canada in Canada, अपने interest rates बढ़ाता है, जिसका मतलब है that Federal Reserve is basically increasing the interest rate on the money that it lends out to the government of the US, and this change in the monetary policy of the Federal Reserve changes how the economy reacts to it. Federal Reserve ने अभी तक अपने interest rates जो थे वो almost zero पे set किए हुए थे, जिसका मतलब है that they are basically giving the US government money for free. During COVID, this was very important because government wanted to infuse money into the economy. अगर आप US में रहते हैं, then you would know that US government was giving out stimulus checks to people who may have been impacted by COVID-19, who may have either lost their jobs, etc., etc. And also the US government was issuing bonds at a very minimal interest rate. Now, when this money is available to the banks, they further lends out this money to individuals, to companies, and so on and so forth. So basically, Federal Reserve का काम होता है किसी भी इकोनॉमी में पैसा इन्फ्यूज करना जब इकोनॉमी sluggish हो रही हो, जैसा कि कोविड-19 के टाइम पे हुआ था. Now, when there was a lot of money which was available or which was infused in the economy during COVID, people started using this money, and since their expenses gone down because nobody was eating out, nobody was traveling, and so on and so forth, they were basically diverting this money into the stock market. And this happened on a mass scale, because of which valuations of some stocks actually skyrocketed. Now the Federal Reserve is deciding that because of this infusion of money, the inflation is actually going really, really high. And what that means is, because of inflation, the prices of normal things, milk, butter, bread, or furniture, or TV, or whatever, is actually also going up. Now, one of the key things that a Reserve Bank or a Federal Reserve does is also managing the inflation. Now, because inflation goes very high, not everybody afford the stuff that they want to buy. When the interest rates increase, there will be fewer people who would be borrowing that money because the rates are high. So there will be less money which will be left with individuals or businesses to basically spend on discretionary things, which basically in turns slows down the demand. And when the demand goes down, the prices automatically come down. So guys, ये था economic का lesson. अगर आपको इसमें से सब कुछ भी समझ में नहीं आया, that's all right. But if you have any specific questions, you can always ask me in the comment section below, and I will try to explain that in detail in one of the future videos. So in conjunction to the increasing interest rates and also the increasing inflation, there is another phenomenon which has been happening since the start of the COVID-19, which is the supply chain shortage. Because of COVID-19 triggered a huge mismanagement of supply chain, and because of which companies have been waiting for their orders to come from offshore, wherever they're being manufactured, which is basically also causing the prices to go up, because demand to jitni hai wo utni hai, but the raw material is in shortage because the manufacturers are not getting their raw materials from offshore or wherever they're sourcing from, and hence also it increases the prices. And to add to it, in the context of India, there are a couple of more things happening. Rupee, if you've been noticing, is actually becoming weaker against the dollar if you look at the past trend. And also the corporate performance, so the performance of the big corporates around India, is also below the par or below the expectation. Now when rupee is weak against the dollar, जो foreign institutional investors हैं जिन्होंने पैसा अपना Indian stock market पे लगाया है, even if the stock market increases, now because the rupee is weak, the return that they're getting on their money is not as much. And on top of that, when the corporates don't perform as well, they are pulling their money out of the Indian market and investing in some of the safer asset classes. And hence the Sensex and Nifty are also going down. So guys, these were all the different reasons because of which stock markets are a little uncertain. Now you may be asking that, hey, okay, interest rates are increasing, inflation को control करना है, populist budget है, rupee weak हो रहा है, but how does it relate to stock market? Now guys, अगर interest rate बढ़ जाता है, then companies in the US or wherever will not be able to borrow money on lucrative rates, or it will become expensive for them to borrow money. On top of that, because of supply chain shortages, they are now able to source their material on an expensive cost, which means कि जो future earnings हैं companies की, they are not gonna be as good as the earnings that they have posted when the stocks were rising. And as you know guys, stock market is all about forward looking approach, जिसका मतलब है investor को अगर feel होता है कि market perform नहीं करेगी in the future, or a certain stock is not gonna perform well in the future because company's earning is not gonna be as good as it has been in the past, investor वो stock आज ही sell कर देता है. And that is why guys, we are seeing so much of mayhem in the market in the last couple of weeks. Now discussing all of this brings to our third point, is what I am doing and what clues can you take to fine tune your stock investment strategy. Now one of the things that you can do during these periods of high inflation is invest into stocks which has less reliance on raw materials being procured from various different sources. For example, some of your software companies, their raw material is basically the talent that they have, or the engineers, or the product managers and all of that stuff. So because of inflation, the only thing which is increasing is their salaries. Now one of the first things that you should be doing when an economic downturn comes is to sit back and think that markets all around the world are volatile. Markets have their own economic cycles of going up and going down. And this has happened all the time. Just open any chart of any stock or any major index and you'll realize that the stock goes up and down, and so on and so forth. So if you have confidence in a specific stock or a specific company that you feel is going to be doing good in the future, in the long run, do not sell that stock. The worst thing that you can do to yourself is letting your emotions guide your decisions. See, during these economic downturns, what a lot of investors, actually retail investors, try to do is follow the herd mentality, where if people are selling, you also feel that risk and you also end up selling the stock. And if all the people are buying, if the market is going up, and you also end up buying at a higher price or overprice, which is actually not justified by the fundamentals of the company. Some of the big blue chip companies that have been around for a while and have a very diversified business across different geographies are somehow recession proof, which means that even if their stocks actually go down in the short term, the stocks will actually go up in the longer run. Guys, timing the market is very, very difficult, and this is something which some of the big names in the market are also not able to do. So the best time to buy a stock is something that you can never guess. So if you are invested in a stock and that stock price has come down significantly, and if you feel that that company has a very positive outlook in the future and that industry overall is a growing one, then what you can do is just add a bit more stocks to your portfolio at a lower valuation. This method of buying stocks is called dollar cost averaging, which means if you have stock at $100 and it comes down to $80, you add a bit more of that stock and it goes down to $60, you add a bit more of that, so your average cost of that stock basically goes down, and in the long run, when the stock goes up, you will have a lower average cost of that stock and you will end up making more money. But having said that, you guys need to be a bit more logical, and that's how I am also being. I do a bit of due diligence in whether the company is actually making money, or is it a penny stock or a meme stock which has made a lot of money to a lot of people in just a very short period of time, but their fundamental business is not as strong. You can see GameStop and Dogecoins of the world, they had a huge frenzy where the stock prices were basically shot up like to the moon, and then it basically came down all crashing. So if you're invested in any penny stocks or any meme stocks, then this may be a right time that you should set for yourself a stop loss, that if my stock goes down, let's say below 50%, well actually that's pretty high, if it goes below 20% or whatever your threshold is, you basically sell, if not entire holding of that stock, but like a significant one, and redirect that money into some of the more fundamentally strong stocks, or better well in an ETF. So that's all for today's video, guys. Do let me know how you liked the whole analysis, and if you have any further follow-up questions on what we discussed today, feel free to drop your thoughts, questions and comments in the comment section below. And also do check out my previous videos where I talk about some of the forward-looking strategies as to what industries have a very significant potential to grow in the future, and you may take some good recommendations from that. I'll see you in the next video, and in the meantime, take very good care of yourself. Bye-bye.